Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Traders await a U.S. jobs report that could flick the switch on a jumbo Fed rate cut this month. Oil edges higher after OPEC Plus delays a planned output hike by 2 months, but it's not enough to roll back the steep losses seen this week. Plus, French President Macron appoints former Brexit czar Michel Barnier as Prime Minister. We'll discuss that appointment as well as EU-China trade with Jean-Claude Trichet. Don't miss that interview in just over 10 minutes' time. And finally, stay tuned for our monthly special Africa Amplified for a deep dive into the top stories from across the continent. That's in half an hour. Well, it's just gone 8 a.m. across the Emirates. We have a shorter show than usual today before we hand off to Africa Amplified. So let's get straight to it. It's going to be a big day for markets. NFP, all eyes on those jobs figures. We're going to discuss that shortly. But essentially, it is going to determine whether the Fed go for that 25 or 50 basis point cut come September. S&P futures leaning towards the red yesterday. Some stabilization coming through in equities the last couple of days. But over the course of this shortened week in the U.S., we're still tracking about 1.5% weaker for S&P, NASDAQ down 2%. NVIDIA, the main catalyst for the declines earlier on in the week, down about 9% in just 4 days of trading. 10-year yield sitting at 3.71, also rallied about 20 basis points this week from where we were last Friday. Brent, some stabilization here, still sitting below $73. We're going to talk about that announcement from OPEC Plus shortly. And then Euro trading sideways. Of course, all eyes on that appointment of the new French Prime Minister, Michel Barnier. We will talk more about that as well. Switching over, I just want to point out that in terms of expectations for today's jobs report, we're sitting at the lowest estimate in over 2 years going into today. So it's not just a deceleration in terms of jobs creation that we're looking at, but also the market's estimates of the number have started to come down too. So bear that in mind. All right, let's switch on and take a look at how markets in Asia are faring. Avril Hong is in our Singapore studio. What are you watching for today, Avril?
We're going to be watching out for those non-farm payrolls as well as the jobless rate out of the U.S. And ahead of that, it's a mixed bag in Asia equities, right? As we wait to see what exactly we're going to get from the data and how that informs the expectations of what we're going to get from the Federal Reserve. And it's also important to highlight that even though we're seeing this mixed bag, if you take a look at the ructions in the market earlier in the week, the Bloomberg chip gauge for Asia chip names is actually still down for the week. I think it's about 5%. So not quite regaining its lost mojo amid all this. Also wanted to highlight what we're seeing on the Japanese currency. As we see a softer dollar, it is also helping dollar yen to move lower still. Fourth session where we've seen this, and the yen is actually at an 8-month high. Of course, part of this is amid these expectations of what we're going to get from the Bank of Japan, but that's also putting pressure on the Japanese equities. Jumana.
Yeah, some hawkish commentary coming through from former Bank of Japan officials. Thank you, Avril Hong in Singapore. Now, switching to oil, it's been on our radar all of this week. OPEC Plus has decided to postpone its oil supply hike by 2 months, but it hasn't been enough to roll back steep losses in crude prices amid fears about fragile demand. Brent dipped below $73 a barrel earlier this week, their lowest since late 2023. For more, let's bring in Anthony DePaula, Bloomberg's Middle East energy markets reporter. Well, there's been a lot of move in oil markets this week. We were talking about how OPEC Plus are viewing the price action. And of course, yesterday they did come out with this announcement. Tell us some of the highlights.
Yeah, I mean, OPEC was looking at a situation where the prices were falling and where there was a lot of concern over demand. So really, it seems a sensible decision because bringing more oil into a market like that was just going to exacerbate the issues. Now, we did have those outages in Libya. Taking about 500,000 barrels a day off the market. So really, what's off in Libya is twice as much as what OPEC was going to be bringing back on. But that situation in Libya is very transitory. So they've been going up and down for a decade now. They had a little bit of stability over the last 3 years, but those outages come quickly and they come back quickly. So we can't really trust Libya or count on Libya, rather, to keep that oil off the market. So that wasn't a factor that OPEC felt they could count on and bring that oil back in the market.
Yeah, so but let's just go back to that OPEC Plus decision yesterday, because they've decided to push back the decision to start the tapering of the voluntary cuts by 2 months. So essentially they're not ruling it out. It's still going to happen. It's just going to happen 2 months later.
It's still going to happen, yeah. And what we're talking about specifically is a number of countries in the OPEC Plus grouping that had made some voluntary cuts. So we've still got a big chunk of quotas in OPEC that they're going to start dealing with next year. But those voluntary cuts were supposed to be start being unwound from October gradually. They've pushed that whole process back by 2 months, so it's supposed to end in December 2025. But really, even when OPEC Plus does start bringing those barrels online next year, they're going to be struggling against concerns over demand again, and other production coming from the Americas, from the United States. And they've got to really struggle with the needs of their members here. We've got some members that are overproducing. Iraq and Kazakhstan are kind of the serial overproducers. A country like the UAE is putting billions of dollars into increasing its oil and gas production capacity, and they want to get some money for that investment. They want to get that oil onto the market. So they're really chomping at the bit to get going. So there are a lot of these countervailing factors inside the group as well, really pushing to increase, but nobody wants to see that lower price.
Yeah, big one. And of course, we're going to continue to follow in the next couple of months with this very bearish setup in the price of crude. Anthony DePaula, Bloomberg's Middle East energy markets reporter. Now, traders are awaiting a U.S. jobs report that could flick the switch on a jumbo Fed rate cut this month. Economists surveyed by Bloomberg are forecasting a bounce in U.S. hiring and a tick lower in the unemployment rate. Let's bring in Ayesha Tariq, co-founder of MacroVisor. Well, the big data for the market this week was those JOLTS figures. That was the real catalyst for fixed income. We've been talking about the move in U.S. Treasuries. It moved about 20 basis points throughout the course of this week. It really feels like, again, the setup into today's jobs market is expectation of weak numbers.
Good morning, Jemana. Thank you for having me back. Yes, I mean, I think today's jobs report is probably the most important of our lives, right? I think going into this jobs report, everybody is expecting a weaker number, as you've rightly pointed out. Now, when we look at the JOLTS, though, like if we zoom out a little bit, we can see that we're still above the pre-pandemic levels. So, yes, the market is getting weaker, but it's not alarmingly so. Right? And this is something even the Fed chair talked about, I think, a little bit in Jackson Hole. I mean, we got Jackson Hole right after the NFP revisions, and yet, you know, he was talking about a weaker market, but not an exceptionally weak market. I think going forward from here, if we see a much weaker number, particularly on the unemployment rate, that's where I think things start to get a little dicey.
So just looking at market expectations into today, and we have it up there on screen actually, the estimates, as we were just talking about, are the lowest in over 2 years. So market expectations, we spoke about, quite weak. The number is 165K jobs for creation, but 4.2% unemployment rate. What do you think the Fed is looking at to determine whether it should go for a 50 basis point cut? Is it that unemployment rate we need to focus on, or the headline figure?
So I think the focus has always been the unemployment rate, and that's the household survey. And there's a reason for that, because that counts people employed versus number of jobs. And as you know, the NFP has been revised, you know, down, up, you know, quite a few times, and not just the following month, but like the following year as well. And so that number can sometimes have duplications, and so we go back and forth on those numbers. So I think the unemployment rate here is going to be key. Now, if you look at the long-term unemployment rate, it's about 5.5%, 5.6%. So I think a number over 4.5, 4.7, 4.8, that's kind of the number which could, you know, propel rate cuts higher.
How do you think markets would react? Let's say we get a very weak print, not just on headline, but also on unemployment rates as well. What is the market reaction to that?
I think we'll get, you know, we saw a little bit of that yesterday. It's a two-pronged thing now. So bad news is bad news, right? The market is getting weaker, the economy is getting weaker, but at the same time, it probably, you know, sets the stage for a 50 basis point cut, and that's something to celebrate. Whether it's actually a reason to celebrate or not remains to be seen, because a 50 basis point cut means the Fed is having to catch up. It means things are much worse than expected, which is not a good thing at all.
Yeah. If I look at the last years, I think of 2023 as the year central banks took on inflation. 2024, when they sort of defeated inflation, quote unquote, because they could start the easing cycle. I just wonder if 2025 is going to be the year where we actually start talking about recession, given the numbers that are coming through from the two biggest engines of growth around the world, US and China.
You never know. So we've been talking about, a recession being delayed, and that could actually happen. I mean, with the way things are going. Now, don't get me wrong, the economy is still pretty strong in the U.S. It's slowing, but it's not recessionary levels slowing. Now, what we need to see is whether there's a broad decline in the market. And the problem with unemployment, unfortunately, is once it starts to rise, it can rise very quickly. Yeah. And so if that materializes, there is a chance that the economy does slip into a recession.
Yeah. You've been overweight gold
yes.
Ever since we started speaking to each other. Do you hold on to that position? Do you maintain it? We're at record highs, close to record highs.
Yes, unfortunately, the geopolitical situation is still quite bad, right? And given all the fears in the market, growth slowdown, everything combined, I think gold is a good place to hide.
Still?
Yes.
Okay. Ayesha, thank you so much. Ayesha Tariq, co-founder of MacroVisor. Now, Secretary of State Antony Blinken says the U.S., Qatar and Egypt will present a new ceasefire proposal to Israel and Hamas in the coming days. The top U.S. diplomat says 90% of the ceasefire deal has been agreed upon. The only remaining issues are Israel's control of the Philadelphia corridor and how Israeli hostages and Palestinian prisoners would be exchanged. But Prime Minister Benjamin Netanyahu has downplayed the prospect of reaching a truce. He is blaming Hamas for stalling talks after the alleged murders of 6 hostages. Coming up, an exclusive conversation with the former ECB President Jean-Claude Trichet, who joins us from the Bund Summit in Shanghai. That's happening next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. China's annual Bund Summit is getting underway in Shanghai with a theme this year of navigating a changing world. Topics on the agenda include global monetary policy, financial stability, and of course, artificial intelligence. So for more, Steve Engel, our Chief North Asia correspondent, joins us with a special guest.
Yep. Yeah, that's right. Our special guest is Jean-Claude Trichet. He is the former, of course, he doesn't need an introduction, the former president of the ECB, the European Central Bank. Thanks for joining us here in Shanghai.
It's a real pleasure.
Okay, so there's going to be a number of different monetary policy decisions in the next few weeks with the Fed, obviously, all within a few days, actually, the Fed, the ECB, and the BOJ. Yeah. What really strikes you? Let's start with the Fed first. John Paulson was out just overnight saying the Fed is way behind the curve. They're acting too late. What do you think? 25 basis points, 50 basis points, and how far?
Well, the market is waving between 25 and 50. I will not pronounce myself and choose myself. They know better, if I may. The Open Market Committee is serious. They have proved that they were really determined to do their job. They increased rates by 11 times. And it would be the first time they will decrease rates. So we will see. In my opinion, they did a very good job. And decreasing rates would not be absurd in the present situation, clearly. And the market is totally anticipating a decrease of rates. Now, how much is another story.
Yeah, and how far and how long are we going to be in this environment as well? And you were telling me just before we went on camera is that you find it interesting. It's not necessarily a treaty among the different central banks, but there seems to be coordination around this price stability of around 2% targets, right?
Yeah. It is not coordination, if I may. It is convergence of definition of price stability, which came progressively. The U.S. decided that definition of price stability in 2012, and Japan in 2013, and now the major central banks, those who are issuing currencies that are in the basket of the SDR, the special drawing rights, have the same definition of price stability. I take it that it is the major de facto reform of the international monetary system since the explosion of Bretton Woods.
Yep.
So it's important, and they stuck to this decision in the occasion of the surge of inflation mid-2021, and it was very well done, in my opinion, by the Fed as well as by the other central banks, including, of course, the ECB. So good job, in my opinion, and the job was facilitated by this convergence of definition of price stability.
I would never ask you to comment on what Madame Lagarde should do with the ECB, because you're not going to tell her through Bloomberg television. But again, that 2% target, we're getting close to that. I think 2.2%, way off the 10.6% or whatever. But I mean, they're in a tricky balancing act as well, the ECB. They cut in June. Do they cut again? What do you think?
Well, the market is expecting them to do that again. It's clear that 2.2% proves that the, I would say, determination of the central bank is paying off, obviously. Still, of course, they have to be cautious and prudent because the core inflation is not decreasing as rapidly as headline. Headline is helped by the decrease of the price of oil and food. But all taken into account, I would say that the market is envisaging that they could do something.
Yeah.
I'm not against that sentiment of the market, say. But of course, it is up to the governing council to decide, and I have full confidence in the governing council.
Are you encouraged by the political stability now in France? Michel Barnier has been named prime minister after 2 months, tumultuous political months for Emmanuel Macron. What kind of reassuring signal does that send to Brussels?
Well, first of all, of course, it was overdue that we have a prime minister. I think that the choice of Michel Barnier is a very good one. I know Michel Barnier. I think it's a man who inspires confidence, and including, of course, in Europe, where he was so instrumental.
In the Brexit
negotiation. But he was minister in France. He has a lot of experience. So good choice, in my opinion. And of course, the difficulties are enormous, including political, but also not only political, also in terms of finance, financial problems and fiscal problems. So we'll see. But I have confidence.
Let's pivot to Asia. Obviously, there's been the great unwinding of the yen carry. The yield differentials have narrowed with the Fed about to cut. Obviously, the BOJ is hiking, albeit very slowly. They would love to have 2% inflation. But where do you see that move going? Do you still see many more hikes coming from the BOJ and a continuing narrowing of that yield spread?
Well, we could hear the former governor, Kuroda, mentioning the fact that yes, indeed, it is not absurd to imagine that there could be very, I would say, modest increase of rates in Japan. In any case, the carry trade was something which was profoundly abnormal for a very long period of time. And it seems to me that the progressive end of the carry trade was something which was overdue, frankly speaking. I said that publicly myself in Bloomberg already. All that being said, again, Japan is in the same basket of those central banks that have the same definition of price stability. And of course, we are not in the same situation.
They're coming from a different direction.
Yeah, exactly. But the goal is the same.
Goal is the same. And quickly, before we wrap up, I mean, China, we just had Yi Gang, the former PBOC governor, in here. You listened to him. It was astonishing. Policymakers or former policymakers of such stature rarely, they're not even allowed to talk about deflation. He did. He said this is what's holding China back. Were you not dumbfounded, but were you intrigued by his comments?
I listened to Yi Gang very carefully. He's very wise, I have to say, and I always experience his wisdom. I would say he said only the reality. I mean, the words are words, but the reality is that some prices are decreasing, and he mentioned that. And I think that the main message that I would myself fully accept is China would probably be better progressively if inflation would be higher, obviously. And that would call for a number of decisions by governments and also perhaps by the central bank to be as accommodating as would be required in order to help the economy as a whole with inflation which would not be zero, but a little bit positive. And I think it is more or less common sense.
Do you see, though, with the Fed pivoting to an easing stance, funds are going to flow around the world, maybe out of the United States, but will China be the beneficiary there, do you see?
It's not excluded. Not excluded at all. Clearly, again, of course, the cycles are not the same, the decisions are not the same, they are not coordinated, they are not taken at the same time. But all that being said, they have the same goal. The ships are going in the same location, you know. And of course, the winds are not the same in the US, in Europe, and in Japan. They are contrarians from time to time, as you said. Japan has to elevate its oil inflation, but all taken into account, there is a better deal than before, because again, all those ships are going in the same direction, which is good.
Jean-Claude Trichet, thanks so much for your time on Bloomberg Television. Always a pleasure.
Real pleasure.
With you.
All the best.
Joanna, I'll send it back to you in Dubai.
Great stuff, Stephen. Thank you for bringing us that interview with Jean-Claude Trichet live in Beijing. Now, we are going to move on. Africa Amplified is coming up. Our monthly special begins at 8:30 a.m. Dubai time, looking into tensions in the Horn of Africa and the Mpox outbreak. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersechi in Dubai. Now for a look at some of the other stories we're following this morning. The U.S. says it is planning to impose export controls on critical technologies, including quantum computing and semiconductor goods. The U.S. is limiting China's access to cutting-edge technologies needed for artificial intelligence over fears that advanced chips and components could lend Beijing a military edge. Turkey's government has trimmed its forecast for GDP growth in 2025 to 4% from 4.5%. The finance minister, Mehmet Şimşek, says any negative impact on disinflation will be temporary, and the priority is to slow inflation to single digits. But bringing inflation under control has proven difficult. The government also revising up its 2025 year-end inflation forecast to 17.5% from 15.2%. And Liam Black has opened a branch of his family office in Abu Dhabi as the co-founder of Apollo Global Management looks to expand his global reach. Black's Middle East outpost, Scimitar, will be located in Abu Dhabi Global Market. The Emirates Financial Free Zone has been attracting a growing collection of hedge funds, private equity firms, and family offices. And a quick look at equity futures before we round up this part of the show. S&P futures, Nasdaq leaning towards the red, Nasdaq down about 0.4%. The Dow leaning towards the green, Euro stocks flat as we head into that all-important payroll report out of the U.S. in a few hours' time. But coming up, we're going to get the latest on the Mpox outbreak that's rapidly spreading in the African continent.